72 hours until silver makes a hard left. Fasten your seatbelts because the price of silver follows a pattern. And in 72 hours, that pattern is going to make a hard left turn. Data will be released in 72 hours that will shake the foundation of silver as a safe store of wealth. This is from Yahoo Finance, and it says a slew of data on the labor market will test investor sentiment on the Fed's path in the next week ahead. The May jobs report is set for release on Friday, and economists expected to tell a similar story to last month's report, with the labor market cooling from its hot start of 2024, but not entering a downright slowdown. The report is expected to show that, check this out, 185,000 non-foreign payroll jobs were added to the U.S. economy last month, with unemployment holding steady at 3.9%, according to data from Bloomberg. In April, the U.S. economy added 175,000 jobs, while the unemployment rate ticked up slightly to 3.9%. Now, this is how this impacts the price of silver. This is also from Yahoo Finance, and this helps us understand how key of a player this jobs report is for the price of silver. It says a hot job market is usually good news for workers, clearly. When the unemployment rate is low, people can easily switch jobs and negotiate better pay from employers. Workers have more money to spend, which drives economic growth. That sounds great, but watch how this hits silver. The article says, but low unemployment and strong jobs growth have a downside. A robust job market can drive higher inflation, setting the Federal Reserve on course to try to reduce it, which can mean a longer wait before interest rates come down. It's exactly what we're living through today. The article continues, a strong job market can drive inflation higher, but inflation can also reverberate through the U.S. labor market. A tight labor market is typically defined by low unemployment rates. This is where we're in. We're presently in a tight labor market. Low unemployment rates, an increase in job openings, and a faster than usual wage growth. So that's great for us as workers, but check this out. Businesses need to hire more workers to keep pace with surging demand. As businesses are forced to compete for workers, they're more likely to offer wage increases and higher pay. After all, if your boss refuses to increase your pay, you can easily take your services to a different employer. Now, workers have more money to spend, and this is the Yahoo Finance article. It says workers have more money to spend, which pushes prices higher. Inflation, after all, is often described as too much money chasing too few goods. Meanwhile, higher labor costs add to the cost of doing business, and businesses either have to reduce production, which typically involves cutting costs elsewhere, and increasing prices, or both. But high inflation also influences the job market, often drawing more people into the workforce in the short term. So most consumers generally can't absorb higher prices forever. And that this is exactly where we are now today. Most consumers generally can't absorb higher prices forever. This is the article. It says, so eventually they'll have to cut their spending in response to rising prices. And that's where we are today, because people, in 72 hours, when this report comes out, specifically Wall Street, because Wall Street always responds quickly to these reports, people are going to realize that, yes, they're cutting their spending. And when they cut spending, they go to a safe store of wealth. And that go-to safe store of wealth is this silver that I'm holding in my hand. I've been stacking silver for years, and this happens every time. I'm not a financial advisor. I'm just a silver stacker like you. And I've been in this for years. And if you've been stacking silver for years, you've been in this game for decades, then you know, like me, that these are the reports that we have to look at, because this shows, first, it shows Wall Street what's coming down the pike. And Wall Street typically responds they typically respond the day before these reports come out, because they're hedging their bets. And if they don't respond the day before, they respond on the day that the report is released, and they respond directly to the report. It's similar to Wall Street responding to any announcement from the Fed. It's as if the Fed is a puppeteer, and Wall Street just follows along immediately. So as we see that people are cutting their spending, which we're seeing across the board, corporations like Target, Walmart, Starbucks, all of these corporations are slashing prices. They're trying to get people into the store because people are not buying like they were. So that's the struggle of a tight labor market like we have now. Yes, we have more money, but prices continue to rise to match that, and eventually it doesn't equal out, and people start to slow down on their spending. So when people slow down their spending, they want to put their money somewhere safe. And they're going to go into precious metals. And that, in turn, gives a big shift to the price of silver.